24/7. My name is Niharika Valia and I am with you with the area of accounting and finance for bankers. Let's start today with our class, and today we'll be talking about the further levels of the accountings that we're talking about. In terms of accounting, we have talked about the basics, we have talked about a few more things, and today we'll be taking it to the next level. The question says the balance sheet is a form of a dynamic financial report or a static financial report, activity reports, or both A and B. So when we talk about the balance sheet is a form of what exactly? See, balance sheet is basically an accounting statement which talks about the financial position of an organization. It talks about the financial position of an organization. So when it talks about the financial position, it talks about whatever is happening in this particular period. That means by the end of that year, it is static financial reports. But why do we call it a static financial report? The basic reason is in terms of balance sheet. The balance sheet, it's prepared at the end of year. Whatever is there as on 31st of March by the end of that particular year, say it is 2022, if it is 2023, whatever year it would relate to, that is what the balance sheet would relate to. So that means if we talk about the balance sheet, it's basically whatever the balance is on the last day of that particular year, where the financial year starts from 1st of April and ends on 31st of March. Right? So that is what it talks about. The next point is the financial management mainly focuses on efficient management of every business, brand dimension, arrangement of funds are all elements of acquiring and using the financial resources for financial activities. Financial management, that would be something that is included in our syllabus from this particular, we are going to have Module A, which is going to be the basics one in terms of accounting, and then we'll be having an extension of financial management and another extension that is income tax and costing. So that is what we'll be dealing with. So let's talk about what exactly is financial management. Financial management is all about if you have money, how do you use that money? It's all about that. So if we talk about the financial management, it talks about all the elements of acquiring as well as using means of financial resources for the financial activities. That would be D. Next point, dash states that anticipate no profits but provide all of the profits for the losses. See, the point is, it is always said that an organization should look forward towards recording all their possible losses. If you are going to face any loss, you should record it right away. But if you're going to have a profit, then you need to wait till the time you actually celebrate for that profit. So they say that if you're facing a loss, if you anticipate a loss coming up, kindly keep a specific amount aside to achieve that, to basically to face that loss, not to achieve, but I think I can say that if you're facing a loss, then if you might face a loss, you should be prepared for that. You should have a certain amount kept aside. It's just like if a bear is going for the hibernation, what do? They have certain fat during their hibernation because there's a cold season coming up. In the business, even sometimes there's an off-season period where the organization might face problems, especially during COVID. There was a period where every organization was closed down for 3 months. So then for 3 months, when people were not earning, they had to keep a certain amount aside to face all the losses that might come up. That particular thing was concept of prudence, which is also called concept of conservatism, which talks about whatever you make in the organization. Concept of prudence is the fundamental concept of accounting, which states that liabilities, expenses, and losses should never be understated. You cannot say, no, I won't face that much of loss. I'll be sorted. If you see a loss coming up, make sure you make a provision which is higher than that. While prudence states that the liabilities are under-recorded, it may be the result in a huge outflow of resources at the time of liability outbursts. Next point, depreciation is the process of allocation of costs, evaluation of assets, allocation of revenue, or both A and B. Depreciation is what exactly? Depreciation is because we use these equipments. For example, I'm using my equipments in order to have a class today. So if this class is going on, that's because of these equipments that I'm using. So these equipments are used every single day. That means due to the usage, there is a wear and tear going on now. Wear and tear, and at the same time, so many new things are coming up. That means there is a depreciation going on. But what is this depreciation? Is it exactly an allocation of cost, valuation, or revenue, or both A and B? In terms of depreciation, what happens is the life of the asset is for 10 years, while the amount is 10 lakhs. So you decide to write off by the end of the 10th year, the entire amount would be gone, isn't it? So I need to make sure that I allocate 1 lakh per year. That is what depreciation is all about. Allocation of the cost. The term depreciation refers to an accounting method used to allocate the cost of the tangible or the physical asset over the useful life or the life expectancy. Depreciation represents how much of an asset values as used. That means it's basically an allocation. That means if the entire amount has been kept in one particular year, we are spreading it over the period of time in order to find out what exact amount are we dealing with. Okay, here comes the next question, everyone. This question says the schedules of the balance sheet and the profit and loss account contains as much details as possible. The financial charges include lease rentals, bank commission, bank charges, etc. See, this is a point which is based upon the financial management there. The financial statements that we talk about, it's basically yes, the balance sheet and the P&L includes everything related to the area of the business, which includes whatever profit are we making, whatever losses are we facing, and at the same time, what assets do we have? The liabilities of the organization, how are they surviving with all those things? That is what the balance sheet, profit and loss relates to. The financial charges includes the lease rentals, bank commission, and bank charges. Yes, this is also true. The financial charges relate to the amount that we are paying in order to get what we want, the loans there. So it is basically both of these are true. Both 1 and 2 are true. The financial accountancy is governed by local standards only, international standards, local as well as international accounting standards, or companies' internal top management only. What would be the answer, everyone? The financial accountancy is governed by. See, when we talk about the financial accountancy is a very broader term. Why do we say that? Because the financial accountancy says that whatever the organization is earning, whatever the amount they're making, so that is, it is governed by not only the national but even with the international standards. Do you know, in our country we are governed by, as such, by Ind AS currently. In our country, we are following Ind AS, which are issued by ICAI, but with the collaboration with IFRS. IFRS is International Financial Reporting Standards. This is formed because of two organizations which are standing in front of it. That is Accounting Standard Boards. That is our Accounting Standard Board, which prepares the accounting standards, and NFRA, National Financial Reporting Authority. Now, these are all the areas which are helping our country to form their accounting standards, the accounting standards which are prepared for the entire country altogether, where people are bound to report as per the format which is given by ICAI. So this helps in bringing up a uniformity. So basically we are having local as well as international accounting standards. Though we do not follow the international accounting standards directly, we're not supposed to do that. We follow our Ind AS, and Ind AS helps us to follow the entire process. Next question, everyone. Which is not a limitation of financial accounting? Inadequate information to fix up the price of the products manufactured, lack of data for comparison of cost of operation of the firm with other firms in the industry, the data available in the historical, in the nature, and complies with the various legal requirements, which is not a limitation of financial accounting. In terms of financial accounting, which one is not a limitation? In terms of financial accounting, see, the point is the financial accountancy is something which relates to inadequacy is definitely there, because again, it does not include anything which is non-financial. Lack of data is something where we face it, because sometimes it's not possible to quantify everything. And the data available in the historical in nature is definitely the point which is valid not only for cost accounting, not only for financial accounting, but all its branches. They do not report everything which could happen in the future. They cannot do that. And at the same time, once the fluctuations are there, how can we record all the fluctuations altogether? We have to consider the fact that we cannot note down all those fluctuations. We can note down things only at their current value. So if we are noting down things at the current value, now it's going to be a strenuous job for the accountant. He'll be definitely very exhausted with all that work. So it's a way better that whatever we did to purchase that asset, we seize that amount right away, and that is the amount that we paid. Then that is the final amount that should be recorded in the books of accounts, not a regular change, which is again a limitation. We cannot practically do that. And the last one is complies with the legal requirements. This is not a limitation. This is basically they're supposed to do in any case. See, in terms of accountancy, they have to follow the income tax department, isn't it? Whenever we are dealing with accountancy, it's not considered but just because the accounting standards are saying that. This is also made in terms of the Income Tax Act as well. So, our country is governed by two kinds of accounting there. In terms of companies, you will find everybody aligning themselves with the Companies Act. You have to follow the Companies Act. If you're preparing for the books of accounts, then you have to follow the Companies Act as well as whatever the income tax department talks about, what are the format they're providing in order to submit your books of accounts. So basically it's a part of both of these, income tax as well as the Companies Act. We are supposed to comply with various legal requirements. Acha, dash is structured representation of the financial performance, financial position of a business and changes over a period of time. Profit and loss account, financial statement, balance sheet or internal audit. This is a structured representation. That means there's a specific format. That is the point number one. The second point says of the financial performance and the financial position. That means we're talking about both. Performance is related to the profit and loss account, while position is related to the balance sheet of the business and changes it over the period of time. Basically, both of these are considered as a part of the financial statements. Otherwise, if they specify only financial position, it's only the balance sheet. If it's only financial performance, it's only the profit and loss account, which talks about whether the organization is making a profit or it's facing a loss. That is what we talk about here. So the financial statements are written records that convey the business activities and the financial performance of a company. Financial statements are often audited by the government agencies, accountants, firms. It makes sure that there's an accuracy and for the tax, financing as well as the investing purpose. Here comes the next point. It says dash records credit sale of traded goods, purchase day book, sales day book, cash book, or none of these. If we talk about this one, we talk about whatever the amount. See, these are subsidy books now. These are extra books. It's just like you were asked to record the things. What you did was you have a rough notebook and you record everything in the rough notebook, and later on you put it in the various subjects. For example, when we were kids, we used to go to school. There in the school we had multiple subjects. For example, we had English, we had maths, we had SST, we had science, everything. So first we were putting everything in the rough notebook and then we would segregate things. This is just like journal there. We have a journal and then we put it in the ledger. Now the role reversal comes in. What happens is in the organization they already record everything in their specific books. That is what they call the subsidiary. Subsidiary books includes the cash book, the purchase day book, that means the credit book of purchases. The credit book of sales is the sales book, and which records only and only the cash is cash book. So this question relates to the credit sale of the traded goods. The goods that we are selling in terms of the credit sales is sales day book. This book records directly only the credit sales, nothing else. So we are directly noting down the SST homework in the SST notebook only. It's just like that. The sales day book is manually maintained ledger in which we record the key detailed information for each individual credit sale to a customer. We make sure that we are providing everything to them in terms of the sale, and we have to make sure that we have verifiability as well. So basically we issue a proper bill that would be the number, invoice date, and invoice amount. Everything would be stated along with it. Then It is an artificial account that appears in the trial balance to account for undetected errors. Here it stands for. See, what happens is sometimes when we are preparing a trial balance, there's a discrepancy that occurs. The discrepancy occurs because of the fact that in an organization, they might be having a debit side and the credit side, but unfortunately, both the sides are not matching, and which is an alarming situation. But why does such a thing happens? The basic things happens because they are just preparing their books of accounts and they forgot about the arithmetical accuracy. One part would be noted properly, the other part would have been somehow compromised, and that is what it leads to. So it is called the suspense account. This is a dummy account which is created and it denotes that the trial balance is not matching. It's the suspense account. Okay. So here it is. This is where our session ends. But before I end my session, there are certain things that we'll be talking about. First of all, our batches are here. The new batches for the JAIIB are just about to start. If you haven't reviewed it well, then kindly go ahead and check it out. For the JAIIB and CAIIB, the new batches are coming up. You can take any of those batches by looking forward to our JAIIB and CAIIB Ka Maha Pack. In terms of the JAIIB Ka Maha Pack, you get a 12 months validity. And how do we look forward to it? 1100 hours of live classes, 303 test series, 905 videos, and 329 ebooks. JAIIB and CAIIB Ka Maha Pack would include not only the English medium class but also the bilingual, and along with that, you also get test series. You also get the numerical batches that we are dealing with, the revision batches, the power pack batches, every single batch that would come up for the JAIIB, and later on for your CAIIB examinations, everything would be included in it. That means live classes, mock test, video, revision, all recorded live batches, all ebooks, numerical batches, even the case study batches, the topic-wise ebooks, as well as in-depth analysis of the subjects. Everything included in this pack. That's why it's called the Maha Pack. And in this Maha Pack, you'll get every further detail of this of the examination. So if you're preparing for it, then kindly go ahead and check it out. All you need to do is click on the area of buy now, and you can take up to a discount of up to 77%, rather I would say 78% if you're going through the app. Then you can use the code Y541. It would cost you 12,419.08. So if you're preparing for this examination, then kindly hurry up, and you can take up our courses where this would not only include the JAIIB but also your CAIIB examination. So one spot where you'll get all the information for your JAIIB examination and later on for your CAIIB examination. So hurry up everyone. We'll be meeting soon. In our classes, the paid batches have already started and we are coming up with another batch. Let me tell you about that batch even. We are starting with a new batch for the JAIIB. That is the JAIIB 2.0 batch. And where can you get the information about it? JAIIB 2023. Here it comes everyone. Here you will find that the new target batch, that is target batch 2.0, is about to begin. So if you're preparing for this examination, then you can join our live batch right away. This live batch will start from January 13th, and the timings for the classes are provided here. The batches which are started, you can see the details of the batches there, and rest you can click on the area of buy now, and you can use the code Y541 and you can get it for 4599.77. So if you're preparing for the examination, then you have these two options. One is the target batch along with the area of the examination, that is Maha Pack. So you can choose whatever you look forward to, but I think it's high time. January has begun and you have counted number of months, and if you prepare properly beforehand, that gives you good amount of time to prepare, to revise, and to analyze where you are going wrong or you might have problems with. So look forward to it and keep learning and keep going everyone. Thank you.